Pi Network emerged in 2019 with an ambitious goal to make cryptocurrency mining accessible to everyone. Unlike traditional cryptocurrencies like Bitcoin, which require significant computational power and energy consumption, Pi Network aimed to democratize the mining process. By leveraging the ubiquity of smartphones, Pi Network sought to enable anyone with a mobile device to participate in the mining process, thus lowering the barrier to entry and making it more inclusive. Unlike Bitcoin's energy-intensive mining process, Pi Network utilizes a mobile-first approach. This means that instead of relying on powerful and expensive hardware, users can mine Pi coins using just their smartphones. This not only makes the process more accessible, but also significantly reduces the environmental impact associated with traditional cryptocurrency mining. Users can mine Pi coins simply by using an app on their smartphones. The app runs in the background, allowing users to continue with their daily activities while contributing to the network. This seamless integration into everyday life is one of the key factors that have driven the rapid adoption of Pi Network. This innovative approach quickly gained traction, amassing millions of users worldwide. The global reach of Pi Network is a testament to its appeal and the effectiveness of its mobile-first strategy. Users from diverse backgrounds and regions have joined the network, creating a truly global community. The promise of easy mining and financial inclusion fueled excitement and speculation around Pi Network's potential. Many users are drawn to the idea of earning cryptocurrency without the need for significant investment or technical expertise. This has led to a vibrant and enthusiastic community that is eager to see the project succeed. However, Pi Network has operated in a prolonged pre-mainnet phase. This means that while users can mine and accumulate Pi coins, they cannot yet trade them on major cryptocurrency exchanges. The pre-mainnet phase is a critical period for the development and testing of the network, but it also requires patience from the community. This means Pi coins are not yet listed on major cryptocurrency exchanges. As a result, their real-world value remains speculative. The absence of Pi on established exchanges has led to questions about its liquidity and long-term viability. Their real-world value and utility remain uncertain. While the potential for Pi Network is significant, the lack of a clear path to market adoption has left some users and investors cautious. The true test will come when Pi Network transitions to its mainnet and begins to operate as a fully functional cryptocurrency. Despite this, the platform has cultivated a large and active community. Online forums and social media groups are filled with discussions about Pi Network, with users sharing tips, updates, and their hopes for the future. This sense of community is a powerful asset for Pi Network, as it fosters engagement and loyalty among its users. This community eagerly awaits the launch of Pi Network's mainnet, hoping for widespread adoption and value appreciation of their mined coins. The anticipation is palpable, with many users counting down the days until they can finally trade their Pi coins on the open market. The lack of a mainnet launch and the absence of Pi coin on established exchanges have contributed to skepticism from some cryptocurrency enthusiasts. Critics argue that without a clear timeline for the mainnet launch, it is difficult to assess the project's true potential. These skeptics question the project's legitimacy and long-term viability. Concerns have been raised about the centralized nature of the network and the transparency of its operations. Addressing these issues will be crucial for Pi Network to gain broader acceptance and trust within the cryptocurrency community. Nevertheless, Pi Network continues to attract new users with its promise of accessible cryptocurrency mining. The ease of use and the potential for future rewards make it an appealing option for those looking to get involved in the world of cryptocurrency without significant upfront costs. The project's future remains uncertain, contingent on its ability to successfully launch its mainnet and address concerns regarding its centralized structure and lack of transparency. The roadmap for Pi Network outlines ambitious goals, but achieving them will require overcoming significant challenges. The next few years will be crucial for Pi Network to prove its doubters wrong and deliver on its ambitious vision. If successful, Pi Network could revolutionize the way we think about cryptocurrency mining and financial inclusion, making it accessible to millions around the world. In early 2025, rumors of a potential partnership between Pi Network and BNP Paribas, a French international banking group, began circulating online. The whispers started on niche cryptocurrency forums and quickly spread to mainstream social media platforms, capturing the attention of both crypto enthusiasts and financial analysts alike. These rumors sent shockwaves through the Pi network community and the broader cryptocurrency world. Enthusiasts and investors were abuzz with speculation, trying to piece together the implications of such a high-profile collaboration. The excitement was palpable, with many believing this could be the breakthrough moment for Pi Network. The purported partnership held immense significance for Pi Network. For a project that had long been in the shadows, this was seen as a potential validation of its technology and vision. The community, which had been patiently waiting for a major development, saw this as a sign that their faith in the project was about to be rewarded. BNP Paribas, a global giant in banking and financial services, partnering with a relatively unknown entity like Pi Network would have been a major endorsement. Such a partnership could have opened doors to new opportunities and collaborations, potentially elevating Pi Network to new heights within the financial sector. It could have legitimized Pi Network in the eyes of many skeptics and potentially paved the way for mainstream adoption. Financial analysts began to weigh in, discussing the potential impacts on the market and the future of digital currencies. The buzz was not just limited to the crypto community, it had caught the attention of the broader financial world. The rumored collaboration centered around BNP Paribas, potentially integrating Picoin as a payment method within its banking ecosystem. This integration would have allowed users to make transactions using Picoin seamlessly, bridging the gap between traditional banking and the emerging world of cryptocurrencies. This could have opened up a vast user base for Pi Network and provided a tangible use case for Picoin. The idea of using Picoin for everyday transactions from buying groceries to paying bills was no longer a distant dream, but a potential reality. The prospect of using Picoin for everyday transactions from online purchases to international transfers excited the Pi Network community. The community envisioned a future where Picoin was not just a speculative asset, but a functional currency integrated into daily life. The news, however, turned out to be too good to be true. As quickly as the rumors had spread, they were debunked. Investigations revealed that there was no official communication or agreement between Pi Network and BNP Paribas. The partnership, as it was being circulated, was entirely fabricated. The community was left disillusioned, grappling with the reality that the much-anticipated collaboration was nothing more than a figment of overactive imaginations and wishful thinking. As the rumors gained momentum, several reputable cryptocurrency news outlets, including Cointribune and FX Empire, began investigating the claims. Their findings quickly debunked the partnership. No official announcements or statements were made by either Pi Network or BNP Paribas confirming the collaboration. Cointribune, initially reporting on the partnership based on an unverified GitHub repository, issued a public retraction. They acknowledged the lack of credible sources and emphasized the importance of verifying information before publication. FX Empire, citing a lack of official confirmation from either party, also dismissed the partnership as false. Adding to the confusion, Pi Network's official channels remained silent during the initial spread of the rumor. They neither confirmed nor denied the partnership, which inadvertently contributed to the misinformation. This silence from Pi Network, while perhaps unintentional, fueled the speculation and led many to believe the rumors were true. The lack of any concrete evidence, coupled with the retractions from news outlets and the silence from Pi Network itself, painted a clear picture. The partnership was nothing more than fabricated news. Section 4, The Ripple Effect, Misinformation, and Market Impact. The spread of the false partnership news had a significant impact on Picoin's price. Initially, the rumor created a buzz in the market, leading to a rapid increase in the coin's value. Investors, eager to capitalize on what they believed to be a lucrative opportunity, rushed to buy Picoin, causing a noticeable spike in its price. While still not officially listed on major exchanges, Picoin has been traded on smaller platforms and within the Pi Network community. These smaller exchanges often have less stringent listing requirements, making it easier for newer and less established cryptocurrencies to be traded. This accessibility contributed to the rapid spread of the rumor and the subsequent trading frenzy. The initial excitement surrounding the BNP Paribas rumor led to a surge in demand for Picoin. Investors, both seasoned and new, were drawn to the potential of a major financial institution backing the cryptocurrency. This perceived endorsement added a layer of credibility to Picoin, further fueling the buying spree. However, as the truth about the fabricated partnership came to light, the price of Pi coin experienced a sharp decline. The market quickly corrected itself as investors realized they had been misled. Panic selling ensued, with many trying to offload their holdings before the price dropped further. This correction was exacerbated by a confluence of other factors, including a lack of real-world utility for Pi coin, early minor sell-offs, and the overall volatility of the cryptocurrency market. The absence of tangible use cases made it difficult for Pi coin to maintain its value once the initial hype subsided, and the continued absence of a Binance listing despite persistent community demand. Binance, being one of the largest and most reputable cryptocurrency exchanges, is often seen as a benchmark for legitimacy. The lack of a listing on such a platform raised doubts about Pi coin's credibility and long-term viability. The incident highlighted the susceptibility of cryptocurrency markets, particularly those of less established projects like Pi Network, to speculation and misinformation. In an environment where information can spread rapidly and without verification, the potential for market manipulation is high. The lack of regulatory oversight and the relative anonymity of online spaces make it easier for false information to spread rapidly and influence market sentiment. This creates a precarious situation for investors who must navigate a landscape rife with potential pitfalls. The fabricated partnership and its subsequent debunking served as a stark reminder of the importance of verifying information from reliable sources. Investors must be diligent in their research, cross-referencing multiple sources to ensure the accuracy of the information they rely on. It also underscored the need for caution and due diligence when investing in cryptocurrencies, especially those in their early stages of development. By taking the time to thoroughly investigate and understand the projects they invest in, investors can better protect themselves from the risks associated with misinformation and market volatility. Section 5. Expert Opinions: A Skeptical Outlook. The false news of the BNP Paribas partnership drew strong reactions from cryptocurrency experts. While some initially saw the false partnership as a positive sign for wider blockchain adoption, many remained skeptical of Pi Network's overall model. Critics pointed to Pi Network's centralized control and enclosed ecosystem as significant roadblocks to mainstream adoption and listing on major exchanges. They argued that these factors contradict the decentralized ethos of cryptocurrencies and raise concerns about transparency and security. David Gerard, author of Attack of the 50-Foot Blockchain, expressed his skepticism, stating, "Pi Network's lack of a public blockchain and its reliance on a closed system raise serious red flags. Until they address these fundamental issues, it's difficult to take them seriously as a viable cryptocurrency project." These concerns, coupled with the fabricated partnership incident, further fueled the debate surrounding Pi Network's legitimacy and long-term viability.